Hey everyone, Andy here from US Stock Info. How's it going? Thanks so much for always watching our videos. I really appreciate it. Today we're going to be breaking down SoFi Technologies, ticker symbol SOFI, and their earnings report. So let's dive right into the details of their Q4 2024 earnings. We'll take a look at how the stock price reacted to this earnings release. And we'll go over the reasons behind the movement in detail, give you the full picture. So definitely stick around until the end. If you enjoy the video, please subscribe to the channel and give it a thumbs up. Thanks. Okay, so let's start by explaining SoFi's business model. SoFi originally focused on student loan refinancing, but now they're diversifying their business, right? Their main pillars are lending, financial services, and technology, I guess. How do these different businesses work together, though? Let's take a closer look, shall we? Okay, let's take a look at the highlights of the financial results. First up, we'll cover the growth in membership and the number of products. Membership has reached 10.1 million, which is a 34% increase year over year. And the number of products has exceeded 14.7 million, a 32% increase. This can be attributed to SoFi's unique strategy, I'd say. That strategy is the financial services productivity loop. It's a strategy of cross-selling multiple financial products. Next, let's talk about the diversification of our revenue structure. Previously, we were mainly focused on the lending business, but we're seeing some changes. The financial services and technology segments have grown. They've expanded to account for 49% of adjusted net revenue. That's a significant increase from 40% in the same period last year. This suggests a shift towards more capital-efficient revenue sources. Fee revenue increased by 63%, reaching approximately $290 million. Loan-related fees and payment fees are contributing to that. Deposit balances have also reached a record level of $26 billion. Personal loans, student loans, and home loans have also increased significantly. They're up 63%, 71%, and 87% respectively. Furthermore, we've been selected as a processing partner for government benefit prepaid cards. That's probably a result of our technology platform being recognized. So next, let's take a look at the financial highlights. Okay, so GAAP net income for the fourth quarter of 2024 is approximately $734 million. That's up 19% compared to the same period last year. And for the full year, it reached $2.67 billion, which is a 26% increase. GAAP net income is $332 million, or 29 cents per share. That's a significant improvement from approximately $47.9 million in the same period last year. And for the full year, we're reporting $498.7 million. Adjusted EPS came in at 5 cents, which exceeded market expectations. Adjusted EBITDA is approximately $198 million, up 9% year over year. The EBITDA margin remains strong at 27%. EBITDA is a key indicator of the company's underlying earning power, Fee revenue increased by 63% compared to the same period last year. There's a clear shift towards higher margin revenue, definitely. Net interest income also increased by 21%. This was driven by the expansion of interest-earning assets and lower funding costs. The balance sheet has also been strengthened. We saw a significant increase in permanent equity and tangible book value. So I'd say we're well positioned for strategic investments and acquisitions. Okay, so next, let's take a look at management's comments. So, CEO Anthony Noto described 2024 as the best year ever, He highlighted record revenue, net profit, and membership growth, right? Apparently, diversification of the business and improved capital efficiency contributed to that. Improved operational efficiency also supported the growth, yeah? Things like reduced funding costs and expansion of the deposit interest rate spread, that sort of thing. He also mentioned that investments in technology and products are important, of course. However, the guidance for the first quarter of 2025 is a bit conservative, I see. They're projecting adjusted EPS of 3 cents and adjusted net revenue of $725 to $745 million. This takes into account a 26% tax rate and macroeconomic uncertainties, you know. He expressed confidence in the long-term strategy and plans to make aggressive investments. So next, let's take a look at the future outlook, shall we? SoFi's management has provided a pretty clear outlook on their future strategy, you know. Okay, so for the short-term outlook, let's take a look at Q1 2025. They're projecting adjusted net revenue of like $725 to $745 million. And adjusted EBITDA is expected to be $175 to $185 million. GAAP net income is estimated at $30 to $40 million, with EPS around 3 cents. That's a bit of a conservative forecast compared to their Q4 performance, isn't it? Well, that's because they're taking into account the uncertainties in the economic climate. So what about the full-year outlook then? They're aiming for adjusted net revenue of $3.20 to $3.275 billion. And adjusted EBITDA is projected to be $845 to $865 million. GAAP net income is expected to be $285 to $305 million, with EPS around 25 to 27 cents. They anticipate a continued shift towards higher margin revenue streams, you see. And they'll also be moving forward with investments in technology and financial services. They're planning to increase their member base by 28%, adding about 2.8 million new members. They're also aiming for tangible book value growth and maintaining a total capital ratio above 15%. Macroeconomic assumptions are being taken into consideration as well, such as GDP growth of 1 to 2% and about 1.5 interest rate cuts. They're also anticipating a normalization of the unemployment rate to 5%. These assumptions are expected to be factors supporting growth, I guess. Okay, so next, let's take a look at SoFi's strengths and weaknesses. So SoFi's strength lies in its diversified business model. You know? It's the synergy between lending, financial services, and technology, right? The growth in membership and cross-selling strategies are also key strengths, I think. You could say their technology platform is highly competitive as well. On the other hand, a weakness is that they're susceptible to interest rate fluctuations, isn't it? Macroeconomic uncertainties are also a risk factor, of course. Competition with other companies is intensifying, definitely. As for growth potential, the development of new financial products is expected, I guess. Efficiency improvements through the use of technology will likely continue, yet expanding strategic partnerships is also important, you see. Potential risks include regulatory changes and credit risk, things like that. Okay, next let's take a look at the analysts' perspectives, shall we? So, how are analysts viewing SoFi's earnings report? Well, opinions are mixed regarding its growth potential and profitability. Investment ratings are a mixed bag. We're seeing buys, holds, and sells. Yeah, target prices also vary among the analysts. Based on the earnings results, it's important to make investment decisions with a long-term perspective, you know? This video is for informational purposes only and does not constitute investment advice or recommendations, you know? Please make your investment decisions at your own risk, okay? So how did you find our earnings breakdown for SoFi Technologies this time? These earnings really suggested diversification and growth for the business, didn't they? Let's definitely keep an eye on how things develop from here. If there are any companies or news stories you're interested in, please let us know in the comments. We'll use that as a reference for our future video production. We'll continue to bring you information about US stocks, so stay tuned. Please subscribe to our channel and give us a like. We appreciate it. Alright, we'll see you in the next video. Take care.